Hello, everyday traders. This is one of your hosts today, Eric Hale, uh, founder and CEO of Trader Oasis. And my business partner and friend is here with me today, Mr. Greg Jensen, CEO and founder of Options Animal. We got to get you an Options Animal backdrop.
We do. Although I like well, that's
Your
all right.
baseballs, your
I like
desk.
my baseballs. See,
Is that the Apple share back there?
that one's actually Disney. I do have an
Okay.
Apple share on that wall
Okay.
of my office,
And a
but
Dodgers shirt, I think, on the other wall.
and that's a Kershaw jersey right over there. Yeah,
Okay.
I definitely have a man cave for an office. So
Well,
yes, it is good to be back with you guys. We have been away for far too long on our podcast here, the Everyday Trader, and in fact, I don't even know if we. No, I think the last one we did do was like right after the World Series, right?
yeah.
We
Yeah.
right after the Dodgers had won the World Series. So
Congratulations on that. That was really outstanding. I'm very happy
a
that
lot of
that
a
happened.
lot has happened since then. Particularly, we've had an election. I know the last time we talked about, right, it was just prior to the election, the potential outcomes. Um, we've now got a lot of cabinet positions that are being named and kind of an economic plan that's being laid out by President-elect Trump, and it's causing some movement in the market, particularly in certain industries. And so, yeah, let's kind of talk today about what's going on with President-elect Trump, and his cabinet. He's putting together maybe some economic positions he's looking at, and what stocks might be either beneficiaries or stocks that may struggle because of potential policies that may come into place. I know the number one policy that seems to be on everyone's lips when they talk about President-elect Trump is tariffs. And I know you have just returned from a conference in New York with a lot of global economists, and I'm sure you had some conversations about tariffs. So what are your thoughts? What are your takeaways from what you learned this last few days?
So yeah, I just got back from Manhattan late last night. I attended Bloomberg's and the Global Center for Interdependence. There's an organization within that group called the College of Central Bankers, and it's a forum for current and former central bankers from around the globe to get together and talk about monetary policy. Pretty interesting group. And when people ask me or that I know, especially our clients, why we go and you and I participate in some of these events, because I'm a firm believer in trying to drink closer to the source. When you are, if you want to try and get the purest information you can, there's nothing that compares to talking to an actual voting member of the Federal Reserve. In fact, I've heard said before, if you really want to know what the Federal Reserve is thinking, ask somebody who just left the Federal Reserve. And there's, I don't know, there were probably 30 or 40 central bankers from around the world, around the globe that were there. Um, I, I was talking with our friend who you introduced me to is Mike McKee from Bloomberg. We were talking about skiing and knees. And Alfonso Prat Gay came over, who's the former central banker of Argentina, which is pretty exciting because they've got an interesting social experiment happening there with Milei, who, by the way, absolutely hates the central bank. So interesting economic experiment. He was positive on it. He was very um, smiling and seemed like he didn't have a problem with it. He said, "Big changes and things are going pretty well." And I said, "You think they'll continue?" And he did. So there was a fair amount of international. So Alfonso Musleum, who's the new Fed president of St. Louis, spoke. And so he was the keynote speaker. Again, some of you might have seen this on. If you watch Bloomberg, you probably caught a glimpse of it. It's on Bloomberg yesterday. But in typical central bank speak, he was a fantastic speaker. Right? He was excellent, very eloquent, and I'm somebody else noted what a good speaker he was, and I'm sure that he's had some charm school or professional training. But Fed speak is a certain language that we've all come to sort of listen and look for subtleties and indications. And we heard words like pause and skip throughout his speech, and that central bank policy may be appropriate for a while, although the path is lower rates, but it may be appropriate at this point in December to pause. We've heard that from a couple different bankers. Waller came out with something. Waller wasn't there, but some of the other Fed we've seen in the news talking about Fed policy. It'd be really interesting to see. I don't have you looked at the CNN, not the CNN money, the CME um, Fed Watch tool to see where they are. I haven't looked today to see where the
I
Fed.
haven't looked where they're at.
So for those of you not aware, there's the Chicago Mercantile Exchange does basically odds on whether the Fed will cut rates or not. And we're got a 70% chance. So yesterday it was 78. Today it's 70. So it's of a rate cut. So there's a 30% chance that we're going to stay at the current rate. So it's shifted a little bit since yesterday. And I'm not sure what the speak was, but look for, you want to Google CME. Actually, maybe let me pop it up on the screen so you folks can see it here.
Well, I was gonna, while you're pulling that up, I think one of the things that, the rumblings on Twitter today have been talking about a early release or some getting the jobs data that we're getting tomorrow, that it's kind of been leaked out there today. And that could be what's changed the potential, the probability of the rate cut. Maybe not as high as it was just yesterday. So that could be I don't, you never know what actually causes the CME Fed tool to move. But yeah, that we do have a big jobs report tomorrow before the open, so we'll see if that actually indicates that the economy is booming. If we have a good job number, I think the likelihood of the Fed cutting rates at the next December meeting is probably lower. You and I are kind of on the same page, and we've been on the same page for a while.
Yeah.
I don't think the Fed should be cutting rates at all right now.
Yeah.
I think our economy is doing great.
I had appetizers and cocktails with Jeff Lacker, who's the former president. Tom Barkin took over for him, who's somebody we've also met,
Right.
Wyoming fishing. Uh, so Lacker was the Richmond Fed president for a long time. And I actually wrote down his words because I thought it was particularly interesting that he's puzzled by the confidence that the FOMC is displaying and that the current policy is restrictive. He's of the mindset and was talking about some pretty wonky stuff. But if you take current inflation and add it to the R star rate, which is the neutral rate, that kind of gives you an idea where the Fed should be. And that number comes out to 5.1, which right now we're lower than that. So he he's questioning, and there's a band of confidence that's in there. But he says certainly from everything that I see, I don't think we should be cutting rates. Uh, and that's the camp that you and I have been in. So I don't know. We have to wait until the 18th to find out. And I guess the key takeaways, there's a couple of key takeaways for uh, this message to you folks today. This is really there's a confluence of things that are happening that could be quite significant. So there's what's the Fed going to do as far as rate policy? We've got a big jobs report coming up on Friday, but I'm thinking about as we get closer and closer to Christmas, um, we've got two things that you and I have talked about. One is the central bank policy. So Jeff Lacker was on a panel with Misasaki Shirakawa, who's a former central bank. I know this is like for some of you people like what? We've talked about the carry trade in Japan before, and basically people can get free money if you borrow in Japan and basically convert it to US dollars you and buy U.S. Treasuries. You can literally get free money, and this is one of the gentlemen who was attending there. We had a side conversation with Shirakawa-san, and we're looking at. He says Japan is basically responsible for all of this development, and we're standing in a high rise in Bloomberg's offices, looking over Manhattan, and Japan has funded so much of the world with a carry trade because it's created free money for those that are savvy enough to figure out how to use it, literally. And we saw this crash that happened. If you go back to the market crash that happened in August, this was because of what everybody was referring to as the carry trade unwinding. And I'm going to share my screen again to show so everybody remembers, because it seems like it's not fresh in people's memories, but this drop here that happened in early August was a result of the Japanese raising rates, and
Yeah,
it's
and that was a really quick, violent 10% correction almost that the market had there in late August in a matter of 2 or 3 trading days.
and it recovered very quickly, so that the thing recovered and hope was restored. But the people who are sensitive to this, and you and I follow Mike Guyed on Lead Lag Report on Twitter, who was also there, by the way. Mike and I have been fishing in Maine together, and hopefully we're going to get him on an episode here in a few minutes, or maybe next week, I think. He said he'd be happy to come on and just do a short discussion about the carry trade and what he's looking at. Because he was the guy right before he was warning everybody about this August pullback, and he was right, but he's a little bit like Chicken Little because he keeps singing the same song. But the consensus among people, and we're talking about some serious, we're here with central bankers. You have to think about who else is there. And we've got high powered money managers, people who manage a lot of equity, who are there. I'm there trying to help get this information so that I can share it with our client base. But there's people who are literally trading billions and tens or hundreds of billions and trillions of dollars that are there for this in the audience with us, sitting right next to us. And one of these money managers cornered Shirakawa-san and asked him, is the central bank in Japan going to raise rates? And the consensus was they have to raise rates. Japan has to raise rates. They don't have a choice. And the way the carry trade breaks is two ways. One is that Japan raises rates and the Federal Reserve cuts rates. And those two things happen. We break the carry trade, and then people get margin calls. This is what happens. People, they're all of a sudden they're getting margin calls and they're having to come up with assets. So what do? They go liquidate assets. And that's exactly what we saw in August. And so the next Bank of Japan meeting. So go on.
No, and I was just going to add color to that. What do you liquidate? You liquidate your winners, most
Yeah.
likely. A lot of times people who are going to look at their Bitcoin position that they bought at 50,000 a year ago, that it's now at 100,000, and they're going to liquidate Bitcoin. They're going to look at Nvidia. They're going to look at a lot of the other big winners that they've had in the year, and they're going to say, okay, well, I gotta get cash, and so that's what causes selling pressure. Not necessarily that Nvidia is exposed to Japan. There's
No,
not really a
no,
direct tie.
no,
And
no.
that's the point I wanted to
Right.
make.
Yeah. Yeah. So all the Mag 7 crashing in August was people saying, okay, I need money. Where am I going to take it from? I'll take it from my winners. And so there's that, which is huge. So you got two things happening. Now, the official announcement from the Bank of Japan is actually December 24th. So it could be a merry uh, Christmas Eve for everybody, or unmerry Christmas Eve, depending on how it goes. But the August meeting, the announcement was several days later, but they had a press conference and they let it out to the news before the official announcement went out. So somewhere around the 18th is a time that I'm looking at for risk. Now, the other discussion that happened at this conference. So Mark Zandi, who's from Moody Analytics, so Mark's the chief economist for Moody's. I'm sure a lot of people have heard of Moody's. He's got hundreds of economists working for him globally. He does a ton of forecasts and look at things. And Mark works for a rating agency, who just so happens to be the last rating agency that still has a triple A rating on US debt. And Mark holds up both hands and says, listen, no insider information, but you got to ask some questions with deteriorating quality and how things could be playing out if Moody's will still maintain that AAA rating. And why is that significant? The reason it's significant is there are pensions and hedge funds and other institutions who have very strict guidelines about what they can put their money in. And a lot of them say you can only own AAA rated credit. That's where your cash goes. And there were two other organizations, so Standard and Poor's and Fitch, downgraded in 2011 and 2023. 2011 was huge, had a huge move in the market. And 2023 was also another significant move when Fitch downgraded. But these institutions can still say Moody's is triple. So we're using Moody's rating because it's still AAA rated. And I mean, I'm telling you, there was a chill in this room full of central banks, economists, and money managers when he mentioned. Everybody kind of was, whoa, did he just tell us Moody's gonna? He didn't say that. He was very explicit about not saying it. I mean, he said, yes, I work there, but I don't have insider information. But one would have to ask the question. And so these are the 2 points that I wanted to bring up to our listeners, is that well, things are going great and the market is screaming higher and everybody's very happy with Trump, happy with his policies. We should talk about tariffs as well, because that could be a big issue, and also immigration, which are two of his things that he's going to do. Those could have positive impact, could have negative impacts, serious negative impacts. Everybody likes the appointments. It seems like there's some puts or takes here and there as far as where things are going, and that just every name that we have is would be sort of bullish for the economy. Uh, but if some of these tariffs get implemented, uh, you know, and this is so I'll mention his name, Leland Miller. So he runs China Beige Book, and he's been a good friend of ours for a long, long time. And Leland lives in DC and listen, he consults with both campaigns, both sides of the aisle, because nobody knows China better than him. But he also has a lot of insight into the platforms of the different policy of parties. He believes we're going to see a different Trump. Trump 2.0 is going to be different than Trump 1.0. And you and I both know, and we finally figured it out, is when the market gets pulled back 5%, it's a buying opportunity, because Trump rolls out of bed every morning and he checks the S&P 500. And if the market's down, he's thinking he's doing a bad job. And whatever, if it's something he did that made the market go down, it was a freaking buying opportunity. Then hindsight, we know that. Now, I mentioned this to Leland, and he says, I don't think this is going to be the case going forward. I think that Trump now has some policy, has an agenda, and it's going to be more about keeping inflation under control and jobs. So he's going to be focused more on Fed type stuff. And if something he does pulls back the market, don't expect him to be reversing his policy, because he is steadfast on this policy. And
I'm still, I know Leland said that. I'm still, if this is Trump we're talking about. Trump loves the market. I'm going to have a hard time thinking that he's going to be able to look the S&P in the face and say, oh, we're down, 10% or we're down 20%, and him not come roaring to the rescue with a tweet about some type of stimulus package. I don't know. Maybe I'm wrong. One obvious difference this time around versus last time, the cabinet he's putting in place is a very different group of characters than the previous one. That all do seem to have this kind of, as you mentioned, this agenda. He's got complete, well, I shouldn't say complete control of Congress, but he does have a unified control of both the House of Representatives and the Senate this time, which he didn't last time around. So maybe we do see some policies that might bring short-term pain to the market. and maybe focus on things like reshoring and a little bit of bringing production capacity back here to the United States, some protectionist type strategies, particularly with China, as we know, has been one of President-elect Trump's concerns for a long time when he was the president before. That was his very strong stance was against specifically China and their economic practices. And I expect that's going to be the same when he takes control again here in January. So
Well, you've seen the banks revising their estimates for 2025 for S&P 500, and Bank of America caught headlines with 6666. So quad six is by the end of 2025. And I don't know if you saw this morning, Wells Fargo is now they're up over 7,000. So it's like 7,000 and change. But I was just by the end of 2025, and hey, I'm hopeful that that's what we see happen. One thing that's different, I watched the Rogan interview with Trump, which I thought was, interesting. But one of the key points that was obvious to me in putting together some pieces of the puzzle, Trump admitted to not having a good cabinet, that he did not put the right people in place. And the pieces of the puzzle that I'm connecting is another guy that you and I have met, or I don't know if you met this guy, but is a political insider who in 2016 was there in Mar-a-Lago when the election. He says, "Listen, I was there all day." This guy's a political insider, right? He is wired inside, and he leans definitely to the Republican side. And he says Trump did not that morning. He did not know he was going to win. He thought he had already lost. I'm like, bullshit. He knew, and he said, "No, I'm telling you, I was there in the room with him. He did not think he was going to win. He was not prepared." And we were talking about the cabinet that he put in 2016 because he hadn't even thought that far. He didn't think winning was a possibility. And like a lot of Americans didn't think it was possible either. So apparently the surprise in 2016 also surprised him. But the one thing that was different this time, and I have been blown away because I have never seen a president with such I'm not going to say whether you agree with it or not, but with such a well thought out plan in terms of putting the people to support his agenda in place. And there's been a lot of them, as you know, that raise the eyebrows. Uh, from Elon Musk and Vivek Ramaswamy on Doge, and Kash Patel coming in around the FBI, and Tulsi Gabbard and RFK Jr. But there's some others that are just, Bassett to run the Treasury. And this is one of the things that was discussed last night over cocktails, is that Bassett actually went out and started having some press conferences, and he said, if you look, they're not happening anymore. And so he was going out kind of explaining how he apparently the scuttlebutt is he gets slapped on the wrist by Trump, which means we've had different Treasury secretaries who've acted somewhat independently. We've had other ones in the past that follow the White House. We now have the White House is going to be establishing the agenda for the Treasury, and that is so I think it's very pro business. But in terms of tariffs go, and you and I were talking before, if you've ever looked at the tariff schedule, and I haven't, but this is Mark Zandi last night from Moody's was the night before saying that if you ever look at a tariff schedule, it's a mess because there's all kinds of exceptions and special rules. Because somebody will say, "Oh, we're going to put 20% tariffs on this country, everything that comes out of there," and then somebody comes, "Oh, we need this component to make this product, which is critical to America," and so that product gets an exception. And so tariffs are not going to be as bad as everybody thinks they're going to be. And how are they going to be applied? Another point Leland made is that right now the focus is on fentanyl. That really is trying to get fentanyl under control, and that's why the Mexico and the Canada or Canada got lumped in too because they're on northern. But Canada's like, why me? But Mexico and China tariffs that apparently Trump's serious about trying to get fentanyl under control. So we'll see. It's interesting.
Another interesting point, and maybe there was talk at the conference about this. I know there was a report, just ABC wrote an article, and this isn't necessarily a new breaking news, but it resurfaced again today about Trump wanting a say in what goes on at the Federal Reserve. And I know Fed Chair Powell has been very confident that the Federal Reserve is going to stay independent of the presidency. Trump has said that he wants some more control of what's going on at the Federal Reserve. Was there any talk about that amongst central bankers about whether they're worried about some type of overreach? I mean, we already know that when Fed Chair Powell's term is done, he's likely not going to get reappointed. I don't think he'll get fired early. So we've still got another year of Powell, I believe. Isn't his term done at the end of 2025? And so there'll be a new Fed chair, but whether you and I were talking a little bit before the recording that people might be jockeying a little bit for the potential to be the next Fed chair. But outside of that control piece, that he has the ability to appoint the chair of the Federal Reserve, was there any more talk about him having some more control over decisions that are made at the Federal Reserve in regards to set Federal Reserve interest rate policy or not?
Jay Powell, May 26th, but sort of a
May of 26. So we got a year and a
26.
half
That's his
still.
year and a half. But listen, in February, a voting member of the Fed who happens to know him pretty well, Chatham House Rolls, told me, he said, listen, Jay's ready to go and he's going to go after the election. Um, and I mean, we all saw the press conference here where Jay said, when he was asked if he's told to leave, they can't make me leave. And maybe things changed since February. But this person said Jay, and if you look at Jay, just he doesn't. I'm looking at his picture right now, and he's appointed in 2018. He looks like he's aged a lot.
Yeah, yeah.
And people don't know this, but Jay's had some health issues. He's broken his ankle. He's very active and rides his bike a lot, does Peloton and that kind of stuff. And he broke his ankle and on his stationary bike in his house, and he doesn't look great. And so I don't know if it's wishful thinking on this other person's thought, but he said Jay's going to be gone after the election by choice, by his choice. He wants to leave. So now could he save face and still do that? And Trump would take credit for kicking him out anyways. So this wasn't officially discussed anywhere, but there was rumblings in the hallways and side conversations as to who's the next likely chair. And I'm not going to say who said it, but one of the thoughts was it depends on how things go. If things get hosed up, it'll be somebody from within the FOMC who gets promoted. If things are going glowingly and there's no problems with the economy, it'll be somebody like apparently Peter Navarro has been in talking to Trump lately. And what position does he have? It's maybe the chief economic advisor, but he and Bassett have both said they want to be Fed chair. So if things are going well, meaning that the Fed can't screw it up, then they'll probably put somebody new in there. We'll see what happens. But the discussion is that the vibe that I got from the conversation is Powell probably won't finish his term, but I suppose that it's in either case it'd probably be a good thing. It's not going to be a bad thing. And that's just more like I don't know, scuttlebutt rumor kind of stuff. That's interesting. I don't know that it's going to have a big impact from a market standpoint as far as what we're concerned about. But yeah, so interesting, and I'm still digesting. I got pages and pages of notes. Lockhart was on record, and he's said this before. So Dennis is the former Fed president. That we don't really know what causes inflation. And I had that conversation with him one on one. I said, "Hey, I'm not an economist, but can you explain to me what causes inflation?" He said, I've read every paper on inflation and I'm not really sure. I'm like, wait a minute, you were the president of the Fed in Atlanta. Here's the other piece I wanted to share with you. And he was talking about GDP now and how it's all over the place. And he's like, yeah, we came up with that index. So the Atlanta Fed, he said, don't look at GDP now until it's the end of the quarter because it's a flash reading. We're taking real time data, and it doesn't really matter until like the second month or until we're close to got to be in the third month of the quarter. So when you see that number GDP now jump around, it doesn't really mean anything. But he was sort of criticizing the Fed and some other people looking at these super cores where they're, take this part out, take that part out. And, inflation is inflation. So, he really questions people trying to dice it and slice it and look at other ways. I mean, people are paying higher prices, and that's the big picture there. So yeah, he said, do we really understand inflation? Which I loved. And we're doing this core, X minus that and X minus this, and you know, we just need to do away with super cores.
Well, I think it's clear that the Fed has a really hard time creating inflation. I mean, how long did they have interest rates at 0% and inflation was at sub 1%? They were trying to get inflation up to their target of 2% for 15 years almost. And so I don't think the Fed causes inflation. I think what caused our inflation was what the government did, the fiscal policy that happened when we printed so much money and put it into people's checkbooks from COVID. And it's interesting that some of that money seems to be still floating around, but those numbers are decreasing. I know you and I have talked a lot about the reverse repo market, and it's back down to only 130 billion in the reverse repo market. We peaked out at about 2.2 trillion dollars back in 2022. And that has come down quite drastically. It's basically almost all gone, that excess liquidity in the reverse repo market. You wonder how much strength does the U.S. consumer still have? Are they starting to tap into credit cards? Are they tapping into their home equity line of credit that they've got with their elevated housing prices? So I still think there's some places to get liquidity that can continue the inflation drive, but we'll see. I think our inflation, my concern for inflation this time around is it's not going to be driven by excess excess funds that have been put in by the federal government, but rather the potential of it's going to be driven by wages. Wages are the thing right now that are still
What's the
pretty
mechanism
sticky.
that makes wages go up, do you think?
What's the mechanism?
Yeah.
Um, a lack
I have a theory. I just wanted to throw it out to you.
Uh, there's several. I mean, obviously, immigration policy can be one of them,
If
and
we're at full
probably,
employment and we kick out 10 to 20 million people, how do you hire anybody?
yeah, you
I mean,
don't.
those jobs got to get done someplace, which is an interesting one. I keep bringing up the whole issue about productivity has been off the charts. And like, well, that's because there's maybe 10 million people working that aren't documented. People are like,
Right.
oh, I never thought about that. But anyways, um, if we deport people, not asking whether you like it or not, if we're at, 4% employment, we'll get a better picture on this tomorrow. Where, where, where do you hire people? How do you get people to come work for you? There's only one way that I know, and that is to offer them more money. And
Yep.
and it trickles down into everything. I mean, that's why I bought a $36 burger recently. It's crazy. So
Well,
the other,
we shall
so you were
see.
getting on the liquidity issue, and there was a paint drying exercise, and it was everything I could do to not fall asleep. But somebody from the International Monetary Fund was there talking about their model on how QE, and they've created this model that all central banks can use, and there was a lot of central bankers who were very interested in this, how quantitative easing could be used and the impact that it could have on the economy and inflation. And so quantitative easing, we talk about this reverse repo, and then the quantitative easing is basically the Fed just decided to just go out and buy a bunch of stuff, and which actually makes me think about back to our discussion about if the carry trade breaks, would the Fed step in and buy? And I think under Trump, the answer is that will be a signal if it's the buy signal, by the way, people, is if the carry trade breaks and the market crashes and Trump's encourages the FOMC to turn around and just keep buying stuff on QE, you know, that's your buy signal. So that's
Exactly. That's your signal to go long equities, long
right.
Bitcoin,
Yeah.
long bonds, long
If
everything.
this so keep right now with and you and I talked to Paul McCulley years ago when we were in Wyoming, and we don't need to really we keep bringing up this reverse repo thing, and it's basically free money. It's actually the banks have too much money on their balance sheet, so they give it back to the Fed and get paid money for the Fed holding it overnight. So it's free money that they get, and just because they have too much money. So just because that money is there, that means there's excess liquidity. That money has to go someplace. That's part of the reason why the stock market is doing what it's doing, folks. And so when that money goes away, that doesn't mean the market's going to go down, but it's like a warning light, a yellow light starts going on. And we can look at other places like QE. So QE, the Fed balance sheet going down. And just recently, Janet Yellen has played some tricks with the Treasury General account to provide some liquidity as well. So these three things, we're going to keep an eye on: QE, the reverse repo, and the Treasury General account. And I expect that Trump will use the heck out of that stuff to backstop whatever needs to be backstopped if we do see an issue with treasuries.
Well, right now it looks like people still have enough money to buy Lululemon yoga pants because they just announced earnings in the after hours today, and they're up. They're not up huge. They're up about 5%, but
Okay,
up about $17. So,
good to know. Good to know. What are you trading, by the way? We don't talk about that very often.
I'm trading. I've got a position on Nvidia right now. My covered call's in the money. I'm trying to decide whether I'm going to allow. I've still got a couple weeks out on my covered call. I'm trying to decide whether I'm going to let my shares get taken away. I just put a trade on Micron yesterday. So
Yeah, I saw
yesterday or
that.
today. Just recently put a new trade on a Micron.
I think it was
Um,
yesterday. Karen did a Google trade today. I don't remember seeing your trade.
oh yeah, that's right. That's right. Yeah, mine was yesterday on Micron. Um, I think those are. Do I have any other positions right now?
You have any Apple?
I'm not in Apple right now. I can't buy Apple at these levels. I don't care how bullish the stock looks.
Well, you know what a fantastic strategy would be?
Yeah, that's true. There's that
The
trade that
Costanza
we did a
trade.
recording on, in
We did the
fact.
recording. One of our most popular ones, folks. If you haven't watched my favorite trade, my Eric's favorite trade, Greg has his favorite trade. My favorite trade is the Costanza trade. Go check it out. That's because I'm usually wrong. So do bearish when you're actually bullish, and so I've done that on Boeing. I've had this work out really, really well for me. Did something similar on Amazon, Boeing, and believe it or not, Palantir, which is I'm just looking at it's doing quite well right now.
Palantir is doing quite well. I unfortunately sold my Palantir position. I shouldn't say unfortunately. I made a nice trade on
Well, you
Palantir.
raised my eyebrows when you got into. I remember you talking about Palantir, like really. And I know I'm a little late to the game, but the trade's doing well.
Yeah, that stock's up like 50% in a month. It's just been on an absolute tear.
My
Uh,
best position though is
it's that electric company, right?
electric,
Well,
electric
they're an
car,
artificial intelligence company, but they just happen to sell electric vehicles.
Tesla.
Yeah.
Yep.
Yeah, they've had an absolute rip to the upside since the election. Tesla's done really well. So,
And Palantir. Yeah, there's been some interesting ones to look at for sure. The key is when you enter a trade, I'll tell you what, if you want to be successful, here's the secret, and that is have a trading plan. Know what you're going to do when the trade works and know what you're going to do when it doesn't work. And if you can be as explicit as possible. So if the stock drops to here, I'm going to, and for those of you, a lot of you use stop loss orders. I haven't used a stop loss order in years. I think there's far better ways to manage your risk without selling your stock. So yeah.
hey, I
Anyway,
didn't ask your opinion. One more thing. We got to give some shout out to our crypto bros out there. What's your thoughts on Bitcoin going over 100K? I
I
don't
don't.
think it's still above there right now, but it was up above 100,000 for a while today.
I
Is it going to 200?
When we were at that crypto conference, I remember Harker was there and Waller was there, and one of the two made the comment is I don't care if people trade baseball cards. So to me, that's crypto. I think that's great. 100 grand. I'm happy for you all. I don't get FOMO. I guess a lot of people do. Like for some reason, if somebody else gets something you don't, then people get jealous and upset. And I don't care. Like I don't, we got one of our instructors at Options Animals, Horace, is doing really well. I'm sure he's very, very happy because they know he puts his entire paycheck in Bitcoin. So, did you know that?
I did. Yeah, he
Yeah.
told me that. I think it's great.
Yeah. So he's doing really, and also he longtime shareholder of Nvidia back prior to multiple splits. I mean, I remember he owned a lot of it when it was like $14 a share, and he was happy when it went to 20 and didn't sell. And so he's doing really well. So good for him. I'm happy for Bitcoin. I still don't know what it is, but the SEC, the new SEC, I'm really glad to see Gensler gone. I think the new SEC chair is going to be what we'll get a definition of what Bitcoin is. It could have a significant impact. Is it a store of value? Is it a currency? Is it commodity? I don't know. Whatever. Well, the other one too, we can get Bianco. So hopefully in the next couple weeks, next week or so, we'll get Guyad on, Michael Guyad, to talk about the carry trade. But I think I shared a screenshot of a test I had with Bianco. He said he'll come on hopefully before Christmas. So we'll
Yeah,
get Jim
that'll
on.
be
If you
good.
have questions for them, let us know. Put them in the comments. Ask questions. And yeah, sorry we were gone so long. Just on a personal note, I had a major knee surgery revision, and I've been out of pocket for about a month. It's not so much that you're sitting in a chair, but you're also on narcotics. So
Yeah, we should have done shows with you
yeah,
on narcotics.
yeah, yeah. I was not, yeah. For a couple of weeks there, I was not really in a good position. So a lot of pain, but
Well,
I'm
it is good to talk to you folks again. Hopefully, we'll get back in the swing of things, make some money here before the end of the year with some volatility that's coming. So, looking forward to these upcoming shows.
all right, my friend. But we'll talk to you later.
Okay, thanks, Eric.